All right, we are live. Welcome back to this week's kind of market recap, where we're going to be going over each of the indexes, S&P 500, NASDAQ, taking a look at the IWO, which is the growth ETF, along with ARKK. From there, we'll look at the kind of leaderboard of the top 12 stocks that I've been tracking as potential leaders in the next bull cycle. Obviously, after today, and even before that, we weren't there. We were still in a bear market, but it's always good to track the potential leadership because those are the stocks that we want to be owning going into a new bull market. We don't want to be owning or holding on to the old leaders, Amazon, Facebook, Netflix, stuff like that. Very rarely do the old leaders lead in the next bull cycle. So I have about a list of 12 stocks that I've been tracking as potential leaders, and we'll go over each of those really quickly. And then I've got about 8-ish stocks to watch for the upcoming week or the second half of this week. Now, after today, obviously, we had the worst one-day performance in the stock market since the COVID crash, which is kind of wild. You would have expected a day like today a little bit earlier in the bear market, but by percentage-wise, this was the worst. So if you're with me right now, congrats. You've survived the worst day so far in the bear market of 2022. And so saying that, we're in a very, very tough trading environment. The stocks that I cover on my watch list are very much to really watch and gauge the market. One of the problems with getting into trades the day after, a couple days after a really large sell-off like this is not everyone, but a very large percentage of investors and traders are hurting after a day like this. So when they see a stock that's a high quality setup and that breaks out, they're going to be selling that much, much quicker to pay for their losses from a day like today. So that makes not only the market environment difficult, but even the stocks that work in this environment are going to have a low probability of holding their moves. So with that said, do we really want to get super aggressive in this market we're in a low liquidity market, we're under all the key moving averages? The answer is no. So we're really here today to go over some potential stocks on our watch list and use those as market gauges for the next week or so to see if liquidity and a bid comes back into the market. Before we start, this live stream is sponsored by MarketSmith, and they're running a deal this week only where you guys can try it out for free. You don't have to put your credit card information or anything. I put that link in the chat, but it's also in the description of this video. So if you want to follow along with me, MarketSmith is the trading research platform that we're going to be using to break down all the indexes, all the stocks, and we can use it for a bunch of different trading statistics. Like they have the fund ownership on different stocks, so we can look at like end phase. We can see fund ownership has been increasing on that, so that adds probability of the trade. We want big money coming into the stock. We could take a look at group strength. Energy Solar is the #1 ranked group. Within the group of 22 stocks, it has all the trading stats. So if you're interested in giving that a try for this week, there's the link in the chat and in the description below. And with that said, I will just start by going over the S&P 500. Today, down 4.3% on above average volume, closing right at the low of the day. Yesterday, we had a really nice oversold bounce. What was this, about 7% rally from the low here up through the 8-day EMA, through the 21 EMA, the 50-day simple moving average. And the low volume with that rally could have meant two things, right? If we got inflation numbers that were less than expected or kind of in line with expectations, then there's a lot of institutional money still sitting on the sidelines, even after a rally like this, that if we got favorable numbers with inflation, there would be a lot of money trying to come into the market, and that could have really caused a short squeeze up to the 200-day moving average. Now, we didn't get that, obviously, right? Inflation came in way higher than expected. We expected energy costs to be down because we see the price at the pump, right? But housing, rental costs went up and food prices went up. So where inflation is falling in one category, it's spiking in others, which, that's not a good thing. Higher inflation, the Fed needs to continue to be aggressive, raising their interest rates. And that with higher interest rates, you have to take your profits, discount them at a higher rate, and that's going to give you a lower stock price. So Obviously not ideal for both just the general people. Like we need inflation to come down, and also for the stock market, because we don't want them to raise rates as aggressively as they will. But they have to do it to lower inflation, and then we have to deal with the consequences in the market. So so S&P 500, this potential support, kind of where we bounced last time, but this was a very, very sharp decline. Even if we kind of bounce, it's not likely going to be a continued move like we had 1, 2, 3, 4 days, very sharp like that. So I am being more cautious than usual. QQQ also had that nice 6-7% rally up above all the key moving averages, except for the 200-day, which was still in a decline. And then today down 5.5%. It's up a little bit after hours, but not much. Closing right near the low of the day on higher than average volume. On a weekly chart, you could see we ran up to that 40-week 200-day moving average, shot down, ran up, shot down, and now it looks like we're rolling over again, which is obviously not ideal. Growth ETF IWO. This and RK are two kind of ETFs that I use to gauge the risk tolerance of the market for more growth type names that I typically trade. That light's super weird. So when this is in an uptrend, when this is acting better than the NASDAQ, better than the S&P 500, I usually see better results in my own trading. So it's good to track. Now I don't trade individually like the IWO, or very rarely do I trade RK, but they're good gauges for risk tolerance in more of the traditional growth areas. So this also kind of was the strongest out of those three. So in this rally, we saw the leaders really perk up. We saw solar stocks break out. And this was really nice, made some decent money the last 4 trading days. But coming into today, like I didn't have a crystal ball. I had no idea what inflation was going to be. I was cautiously optimistic because of that low volume rally and the institutions on the sidelines that would have to come in if inflation was lower, but we did not get that. So, I mean, I only had 2 positions coming into today, and I got super lucky with one, which we'll cover in a little bit. But this is holding up better than the NASDAQ. A lot of the leaders we'll cover in a second also held up better than the indexes today, but and then RK got rejected right at that 50-day moving average yesterday, closed right on it, and then today down 6.8% on above average volume as well. And this has continued to be in a stage 4 decline. We had a really strong kind of bear flag through here, but now that looks like it's breaking down as well. So we'll see how that goes. All right, so those were the indexes. If you guys want to take a look at any individual stocks, I see them in the comments already, but keep on asking those questions. If there's a question that goes with a chart that I'm showing, I'll hop into that right away. But if it's just a chart request, we're going to cover those in the second half of this live stream. So I see, hey Nick, how much exposure do you have on right now? Actually, not bagel. I was going to say bagel, but I do have a small position in WOLF. That's about a 5% position size. So coming into today, I had 2 positions. I had Wolf, which we'll cover in a little bit, about 5% of my account, and then CPRX. This is the one that I got really lucky on. I also had a 5% position on this. They were included in the S&P small cap, or microcaps? No, small cap 600. So with that news, this popped up 12% after hours. I sold half after hours last night, and then even today, it was holding up really well, shot up to 17, and then when it failed at 17 again, I just took the rest off. So thankfully, I mean, this was a good entry point, good trade that we can cover, but I had no idea that this was going to be included in the S&P 600. So, I mean, that was luck, but it was a really good low risk entry point, so I'm still proud of that trade. But anyway, so my Roth, my traditional IRA are both in cash now, and my individual trading account only has a 5% position in Wolf. So very, very cash-based and defensive right now. Next, we're going to take a look at the 12 stocks on my leaderboard to see how they held up, and 6 out of 12 of those were within either only down 2% or better, which while the NASDAQ was down 5.5%, that shows a little divergence between what the leaders are doing and what the indexes are doing. And that's typically what you see as we eventually work up the right side of the base in the indexes, because you see lagging stocks that used to be previous leaders, like Meta, down 9.4% today on massive volume, right near the new lows. Google, previous leader that we don't want to be involved with anymore, down 6%, almost near the lows now. Amazon was down, 7.6%. It's not likely to be a leader in the next bull cycle. So a lot of these large cap names are starting to continue, or are continuing to roll over, show weakness compared to some of the leaders like the solar names, some biotech stocks that we've been watching, which that divergence is good, but until the indexes find their footing and find some type of bid, we're still going to be in a low probability trading environment. So while we go through the lists this week, we're really just looking for relative strength, but it's not so much relative strength to buy on weekdays in the market. It's relative strength to notice, to take note, and when the market gets a bid, when the indexes start to firm up a little bit, and we see a couple examples kind of run without us, then we could start dipping our toes back in the market. But what the indexes are doing versus the leaders is starting to diverge, which is a positive thing for us as traders. AEHR, this was one that I nearly took off the leaderboard because it quickly fell from like $19.4 down to $13, but it shot up so quickly, so I wanted to give it the 50-day moving average, and it came into the 50, a little bit above. I think the low was $13.03 here, so nice support right at $13. And this was actually up 13.5% today on higher than average volume. So I didn't have a chance to take a look at the news that was driving that, if there was any news, but it's something to watch. This stock clearly isn't done. Maybe it'll tighten up and kind of pull back around $15, and we could get an entry in a week or two on this name. But really nice move today, one of the leading stocks that were up. Next, we have Celsius. Pretty disappointing action, down 7% today, closing under 100. It did come on lower than average volume, which is nice, but I don't see a really clean entry point. We're under the 8 and the 21 EMAs now. Maybe we pull back to the 50-day in this previous area of support around $93 if the market continues to sell off. But I don't see any clear entry point right now. Maybe a oops reversal, but I liked trading the oops reversal when we were kind of halfway through a pullback, and I traded that in here from 97, then up to one. I think my average I sold it was 114, but now this is starting to, show a little bit more weakness out of the leaders. So that's Celsius. CPRX. So I'll just cover the trade really quick. This was a biotech stock. Biotech's the 6th strongest group in the market out of 197. So that group actually was showing some weakness as we were pulling in here. XBI, the biotech ETF, really fell, got rejected at the 200-day, and then sharply fell under the 50-day moving average. And then it was this day where biotechs caught a bid and CPRX really started working. I bought this right at $13.89 over the previous day's high as it came through the 8-day EMA. And it shot up 8% that day, another 2.5% the next day, sold into strength both of those days. And then had that last piece that I sold for, I think it was plus 22% at $17 today. So again, this was a nice low risk entry point where it was one of the stocks in the biotech group that was holding up the best, bounced at the 21 EMA, didn't undercut it. And then I had a very tight stop, about a 1% stop, 1.5% stop on my entry point. So the trade execution was A+ on my end. Now, did I know it was going to be included in the S&P 600? No idea. So chalk that up to luck, but I will happily be lucky on a name like this. So I sold that into strength today. Next is ENPH. Solar stocks showed great strength today. This was down 1.1%. It did go green during the middle part of the day. Came in, bounced right at the 21 EMA. We'll go to a 15-minute candle here. So we pulled in. We didn't respect 295, which I thought we would because we opened above that, Started to rally over $300, but then reversed and then took out 295 and the previous day's low, but eventually caught a bid, ran back up, took out yesterday's high, which was very impressive, took out 310. And then eventually, as everyone was seeing larger and larger losses in their portfolio, they're more likely just liquidating the winning stocks to pay for their losses, which is the opposite of what you should be doing. But on a day like today where everything was just liquidating, it's only kind of a matter of time before the leaders pull back. So this went from 311 down to 303, but still closed over 300. Great relative strength. And it wasn't just Enphase in the solar group that was holding up well. It was also First Solar, SLR, if I can type that. First Solar flat today. So while the NASDAQ was down 5.5%, both of the solar stocks, EMPH and First Solar, were showing relative strength. This also broke over yesterday and the previous day's high. Did this put in an all-time high? Let's see. 140.14, 139. Yeah, so it put in an all-time high today, even while the NASDAQ was just getting rocked. The S&P was just getting rocked. So this is the divergence that I'm talking about between the leaders and the indexes. Now, again, we don't want to immediately rush into these names because if the indexes are going to continue to fall, eventually we're going to see pullbacks in these leaders. And we want to be pressing the market, and we want to be putting exposure into the market when the wind is at our back and we can immediately make progress on our entry points. Otherwise, we want to stay in cash, be protected. This is a tough trading environment. Like a lot of the people say, the winners of the bear markets are the people that lose the least, not gain the most. So we're just trying to keep note of what's been holding up. I fully expect if the index continues to roll over, this will eventually pull back to the 21 EMA, and we'll probably get an awesome low-risk entry point in the next 2-3 weeks or something like this on this name, as long as we're patient. But it's a name that we want to have on our watch list because for some reason, on a day that everything else is selling, they're not as quick to sell solar stocks. So that's something we want to be watching. LNTH, this is one of the hardest stocks that I've found to trade that's still a leading type stock. You can see it just doesn't respect the key moving averages, like the 8, the 21, the 50-day. You can see a lot of shaking between that, but it's been super choppy in an uptrend. And as long as it's holding up above the 50-day moving average, it's something I want to have at least on my watch list. And today, only down 1.9%. And on lower volume. So good action out of that leader. Semiconductor stock, ON, not great, down 7%, closed at the low of the day on heavier than average volume. Still above the 50-day. And I mean, on a weekly chart, this looks really nice, right? You kind of have a shakeout here, but what was this? 31 week, only a 37% pullback, which is nice. And now we're kind of working on a handle here. So eventually, this might give a low-risk entry point. I'm not in any rush to get into this name, but it's something that I want to keep a tab on. PRVA, only down 2.8% today. Also was green at one point, taking out the last 3 days' highs. We'll see if this pulls into 40 on lower than average volume while the 21 EMA catches up, and then eventually maybe forms a lower-risk entry point in the next week or so. But this is in computer software medical. That medical group is also a group to focus on, whether it be like computer software medical, biotech, stuff like that. That medical theme is something that has been showing strength. So only down 2.8% on lower than average volume. Held the 8-day EMA. You can't be too mad about that action. RYTM, one of the more volatile biotech stocks, but has massive power when it gets going. Went from $4.63 all the way up to $28 in like 3 weeks. From there, it looked like it was toast last week and then immediately reversed, consolidated, and then yesterday broke out over $25. Was up 13.5% yesterday. And then today down 6.3%, still above the 8-day EMA. So another one that, even though it fell so quickly, so strong today, it's still above all the key moving averages. So we got to be a little bit more patient with this and allow it to set up. And especially after a move from $5 to $25, so 400% return. a little bit more consolidation is probably needed in a name like that versus a name that goes up 20% and then consolidates for 3 weeks and is ready to go. So that's RYTM. SWAV, this is the other trade that I took today. I was on the hunt for oops reversals right at the beginning of the day because I thought, okay, maybe inflation, we gap down just to really shake out the bulls one last time and then we rally from there. So I was on the hunt looking at like Celsius, looking at SWAV. What was another one I was watching? ENPH. I did not take that trade, which I'm kicking myself, but that's fine. But with this, we gapped down under the previous day's low, under the 21 EMA. And then as we rallied back through yesterday's low and overtook 280, that's when I got in. Small size, 5% position, more of just like kind of testing the waters to see if we would catch a bid where the leaders would really start to rip higher while the indexes kind of caught their footing. Again, obviously that did not happen, but I got in at 280, sold at 285, like closer to the end of the day. I just don't want to be holding too much risk overnight in this market, and it was a nice 2% gain. But I really like how this closed. It was up 0.2% today, closing near the high of the day. Let's see, what was it? 85th percentile of the daily range, which is good. A little bit under the 8-day EMA, but we did reclaim that 21 EMA. So this is in medical systems equipment, 22nd strongest group in the market. And this is the second strongest stock out of 74 in that group, which is nice to see. So if we give this a little bit more time, that doesn't really help. It is a lower traded stock, only 500,000 shares traded. So that's another reason why I didn't really size it up, is because the bid and ask was about 0.5% difference. So I don't know. In this market, in a challenging market, I definitely don't want to give that too much size, because then if I need to get out, I need to hit the bid, I need to sell at the bid, which is going to be another 0.5% ding to the account. So, or 0.5% ding to the trade. So you want to size that a little bit smaller, but this is holding up really well, well above the 50-day moving average. Let's see if it can tighten up. If this breaks over today's high, like that would be a mental trade for me. So like I'm watching that area. I might not take that trade. I probably won't take that trade tomorrow, but it's one that I'll use as a data point. So if we break over, like I have a notepad here. If we break over that day's high or today's high, what was that? 289.55, that would be a potential entry point. Okay, say I take that trade, paper trade, whatever, and then it continues higher and closes near the high of the day. Then that's one data point saying, okay, one quality setup worked in the market. Now go through the other 8 stocks that you have as potential quality setups and see how they did. If they all are working and we see 8 out of 8 moving up, then you can get a little bit more confidence to dip your toe in the water in the market. But if this breaks out over yet today's high and then immediately reverses lower, and that would be a losing trade, then you got to mark that down and you have less confidence and you still need to be patient in the market. So that's how I'm using a lot of the trades on my watch list, or the stocks on my watch list, just as mental trades and kind of mental checkpoints for the market. That's SWAV. 2 more of the potential leaders. TH, this was down 4% on below average volume, closing right on the 8 and the 21 EMAs. This is one where if we get maybe 3 or 4 days to tighten up, I could see like a break over yesterday's high, 1390, as a potential entry point, but probably need a couple more days on this for sure. And then TMDX, this is one that's just been really hard to find an entry point in. There was one entry around $35 here, which would have been kind of the place to get in. And then since then, it's just been pretty choppy, but in a really strong uptrend. So I haven't found a way to get in this stock, but it's in that medical products group. And I don't know, we'll see. With the market pulling back and this needing more time, I'm not in a rush to get in. If we pull back to 50 and the 21 EMA and then create a lower risk entry point there, awesome. But I don't want to get too aggressive with anything right now. So any questions going over the leaders? I'll give that about a minute as I'm reading through the comments here. But ARC going short. CSIQ was up today. Yeah, Michael, good point on CSIQ. Also in that energy solar group. Good shakeout under 40 today, and then closed right near the high of the day, 85th percentile. It's still under the 8 and the 21 EMAs, and those are declining. And this is kind of a secondary name in the solar group. So we could use this as a checkpoint, but if I'm going to trade something, I want to trade like the strongest 2 or so stocks in that group, ENPH and First Solar, but we got to let them set up for us. All right. Next, I'll go to, I have 8 stocks to watch as potential trades, but not super confident about any of them. And then if you guys have any chart requests, drop them in the comments, or any just general trading questions as well. That's probably going to take up the majority of the time here because there's not much to talk about with charts here. So any general trading questions, how I manage risk, what I look for with entries, drop them in the comments, and we can get to a lot of those tonight. So first one is ASC. This is an oil and gas pipeline. This is shipping with oil and gas, so kind of a combination group there. Holding up well, only 680,000 shares traded a day, so a little bit thinner there. This was on my it was on my watch list today, looking to take $10, and it actually closed above that 10.01, which is nice to see. Came back to the 21 EMA, touched that, and then rallied to close right near the high of the day. I think this was, if I go to a 10-minute chart, yeah, you can see we took $10 out on the upside and then immediately came back, zipped higher. Just, you see a lot of volatility in this. So I'll probably use this more as a mental trade than actually putting capital work on this one. All right, let's see. Hey, James, what's up? How's it going? AXSM, this is one that was on the breakout watch list coming into this week and still acting okay. A lot of the biotech stocks did hold up pretty well. So with this, we bounced at the 21 EMA, closed above 60, closed under the 8-day EMA. That's kind of where the high of the day got rejected. But I was looking at the previous 2 days pivot at $63, right around there as a potential entry point on this one. And I think that's still in play. I would love for this to just like put in a couple of tight bars right around 60 and then curl up after we get a little bit more of a like sell-off and fear into the market tomorrow. But again, I'm not super confident with anything in the market, so I'm not hitting this with a 20%, 30% position size. It'll be more of like 5 to 10% testing the waters. So what are some other biotechs? PLRX, this isn't on the watch list. I'm just using examples of biotechs that held up well. I got in this on Friday with a break over 2050. It was an intraday pivot at 2050. And then I sold this into strength right away. And I said, I want to be disgusted with myself for selling too early. And this one's actually proving me wrong a little bit. Really good strength today, up 0.1%. The previous day was up 5%, I think. So more biotechs shaping up and more biotechs setting up, then we get more confidence in the group. So when the market catches a bid, that's the group along with solar that we want to be focusing on. All right, next we have BSM. This was also on the breakout watch list. I was watching this on Friday, gapped up above my entry point, and then today we kind of came in a little bit, down 0.7% on lighter than average volume. Bounced right at the 8-day EMA. Let's see if there's an intraday pivot we could work with. Not really. So with this, yeah, just looking for like 1630, but again, more of a mental trade for me. BSM, this is an oil and gas. A lot of oil and gas names are still having their cup and handles being set up there. DVN, this is Devon Energy, also oil and gas. Same story. This was down 3%, so a little bit stronger and on not above average volume, but yeah, slightly above average volume. This, want to see it come back through 70 and then the pivot with the 2 days highs, 71.44, 71.57. Pretty standard there. If I were to trade this, again, I'm not looking to trade any of these, but I would try to get in a lower risk entry point, like a break through 70, and then keep my stop under the 21 EMA if I'm going to trade that. It's DVN. ENPH, we already covered how strong it was today. If we get continued weakness in the market and say we gap down under the 21 EMA, Then, similar to my Celsius trade, we could look for an oops reversal where we gap under the previous day's low, under the 21 EMA, and then looking to enter the stock as we recapture that previous day's low and the 21 EMA. So on the end phase chart, the low today was 293.04 and the 21 EMA is 293.38. So say we gap down under 293 and early in the morning, the market catches a bid after the gap down, and then we reclaim 293. That would be a potential entry point and a way to kind of weasel yourself into a potential leader in the market. And then your stop loss is the low of the day. And so usually that's 1%, 2%, something like that. So you could get really tight stop loss and get a lower entry point in that potential leader. And in 2022, my 3 most successful trades has been with these oops reversals on the 21 EMA with Enphase, Celsius, and LI Auto. So it's something that I'll be watching for again. It's just hard to have conviction to size those up while the market is so dangerous. It's something that is better used in a bull market, that on a stock that gets like a downgrade or something, and then the downgrade scares some people off, but then buyers step in and bid it back up. In a weaker market, it still works, but I'm going to be sizing everything lower. Again, I'm not trying to hit any home runs. I'm not trying to make a ton of money in this market. It's more about just getting a little bit of feelers out there and see what's working. FLNC. This was my pick for the Twitter space yesterday, and it's holding up okay. It did undercut a bunch of previous lows, but we closed over the 21 EMA. This is in the energy alternative group, which is the 4th strongest group in the market out of 197. And a lot of stocks in this group are also setting up, or holding up, excuse me. So it's one that we want to watch. Like it's basically anything energy is at least catching a bid and showing some relative strength right now. So my mental checkpoint is a break over today's high. 1865 is that potential entry point. Or if we gap under, kind of like an oops reversal entry. But we could take a look at some other names in that group by using MarketSmith. FLNC. So if we go over to industry sector and then view stocks in the industry, and if you guys want to do this on your own computer, you can use the link in the description below. Just sign up for MarketSmith. It's free this week to try out. So just kind of showing you what I do a lot of the time when I see a stock in a strong group is I go through the rest of the group and I can just sort it by relative strength and then take a look at the stock. So MNTK, this is a stock that I bought at 17.5, sold it yesterday. Again, I didn't sell it because I knew that inflation was going to come in hot. I have no crystal ball, but I knew there was going to be extra volatility and extra risk. So I had a 14% gain on this. That's well above my average gain this year. So decided to just sell it into strength. Today, down 6%, but still above all the key moving averages. So that's holding up well. FREY, above all the key moving averages, down 3% today. CEG made a new high yesterday, only down 2% today, also above all the key moving averages. That's a little thin. Plug Power forming a pivot here at $30. So this is something that I like to do is when I see a strong group or I find one stock in that group setting up, can I get a little bit more confidence in the group if a bunch of stocks are also setting up for a potential breakout? And right now, we're not seeing many setups for breakouts, but we're still seeing some relative strength in the group. So that means maybe not tomorrow, but in a week or something, we'll start to see some setups in the group. So FLNC, looking for a break over today's high, 1865. That would also get us over the 8-day EMA. But this has been flagging out nicely as it builds the right side of its IPO base. SWAV we already covered, but one that I'm going to be using today's high as that potential entry point for my mental trade. Covered Wolf, or no, I didn't cover Wolf. So this is the only stock that I currently own. We had an HVC, so highest volume in 1 year on this earnings day, where the stock was up 32% or 31.8% on 730% the daily volume. So massive volume buzz on that move. And then you kind of see the inverse head and shoulders. There's the left shoulder, right shoulder, and the left shoulder, head, right shoulder. Right shoulder's low is above the left shoulder's low, which is exactly what you want to see out of an inverse head and shoulder. Tons of power came into this name, very strong closing range. As the market sold off, this sold off a little bit as well, but never undercut the low on that power earnings gap. And then we pushed higher as the market pressure relieved just for a couple days. And then we got that steep sell-off for 7 days. This came right back, but again, didn't undercut the low. We consolidated, and then I got in with a break over 110 right through here. And since I got in, it never came under 110. So I did sell a third of it into strength on the second day here, but still holding the rest. So this is showing great relative strength. This was down 2.6 or 2.5% today. Again, NASDAQ down 5.5. That's relative strength. It's not in the strongest group. Semiconductors are a pretty weak group. NVIDIA just put in a new low today. AMD is very close to it. But this is one of the leaders in that group. It's number 1 on relative strength out of 31 stocks that make up the group. Number 1 on accumulation distribution. Number 7 overall composite. So with this, if we can pull back in the market and the stock pulls back to 110, I want to be adding to that as the 21 EMA catches up. So that's WOLF. And then just two really quick ones, kind of like secondary names that I'm keeping a watch on is ORA. Nice pattern, also in that energy alternative other group. Nice move on the 7th on above average volume, up 5.5%. Then as the market pulls back, we pull back too on lighter than average volume. Let's see if it gets supported at that 21 EMA around $94. And then H&R Block, the most confusing potential market leader out there. We had this massive move on incredible volume early in the year. Let's see, in May. I think no, that wasn't the day the market bottomed. But tons of volume coming into the name. It shot up from $24 up to $35. Then pulled in, scaled higher, had another positive earnings, and now we pulled in again. We have a 3-day pivot at 45.67 area. So we'll see. Maybe this is just me being stupid. I just don't feel like H&R Block has market leader potential, but it has been proving me wrong all year. So maybe I should just swallow my pride and then trade the chart in front of me. But something that I'll be watching, 45.50, 45.70, around that area for H&R Block. And those are the 8 to 10 stocks that I'm going to be using as potential watch lists for the second half of the week. Before I get to all of your comments, and keep the comments going because we have another 20 minutes to go, if you guys are enjoying the stream, please leave a like on it. Helps YouTube push it out to other traders and other people interested in the stock market. And also subscribe to my channel. I'm doing this trading live stream every Tuesday. I do my own watch list video on Sunday morning, and then I'm starting the trading audit series, which if you haven't seen the first one, just go to my YouTube videos. It's, I think the second video out there, but people can email me at stocktrickswithnick@gmail.com. That link is also in the description below, and then just reach out. What I do is I send you a list of 12 questions. You answer those 12 questions about your trading, and then you also send in your past month or so of trading. And then we do a one-on-one call where I go through kind of what you're doing well, where are some areas that you can improve on, and we film it, make it into a useful YouTube video for other traders. So if you guys are interested in doing that, you can email me at stocktrickswithnick@gmail.com. All right, let's get into some of these chart requests. Michael EMN. So chemical plastics, one of the weaker groups in the market. So I've never heard of this stock. So this is like, you're seeing exactly how I analyze a brand new stock in the market. So the first thing I do is I go group strength. Okay, what does it do? It's in chemicals, plastic. It's a very weak group in the market. I'm not likely going to be trading anything from a weak group because we don't have the probability stacked in our favor if we're taking a trade in that group. It's also under all the key moving averages right now. So under the declining 200-day, under the 50, the 21, and the 8. So between those two things, under key moving averages and in a weak group. I'm not looking to take this on the long side. Yes, it can have an oversold bounce. I'm terrible at trading oversold bounces. It's really tough to know when a trend is like reversing and stopping. So I'll leave that to other people who do trend reversals. But for a short position, I think today, I mean, obviously today would have been a really nice entry point, but it really lines up a lot that you want to look for in a short. Let me go to a weekly chart. So awesome. You have your kind of stage 2 uptrend, your stage 3 where you get really volatile action, and now we start to drop under the 40-week, 30-week moving average on higher than average volume right here, and now we start the stage 4 decline. Nice bear flag into the drop last week, and then stronger drop this week. So yeah, really good short if you got in through like the break under 90 or maybe the break under 88, 97. And what I'll say with shorts is they work in a bear market, but you have to be a little bit quicker when you're trading them, because in a bull market, trading on the long side, stocks can go up more than 100%. In a bear market, if you're shorting, you can only make 100%. A stock can only go down 100%, and stocks aren't going to go down 100%. So you got to be much quicker, taking some profit on the way down than in a bull market trading on the long side, taking profits on the way up. So weak group, weak stock. I see you did short it, Michael, which is awesome. Probably have a protective stop, I don't know, around 90, or maybe half of it right at your entry point, wherever that is, just to take that risk out of the trade as quickly as you can with shorts and with anything in this market, honestly. RK going short. Yeah, I mean, it's tough because we gapped down so quickly today, and then a lot of the really nice entry points, like if we gapped up to start the day and then lost the 50-day moving average, that would have been like an A+ short. But with a gap down, it's a little bit harder to get that short going. CSIQ is up, looking for a bounce just under 390. Okay. Yeah, I mean, I don't know where we're going to bounce, but my guess is the leading stocks are going to start to show relative strength and break out before we get a tradable bounce. Talked to Stock Chart Art. James, thanks for showing up. Can I go over a chart for Carvana 3 months? I think I'd have to look back, but I think Carvana is the stock that I've made the most money on this year. And it's with like trading from both sides, but a little bit quicker. Quickly going to a weekly chart, you could see once you break that under that 40-week moving average on above average volume, or the 200-day, it's just never a good sign. Or okay, I shouldn't say never. Thinking in probabilities, it's usually a very bad sign, and you get that stage 4 decline. This is a great chart to print out and just be like, okay, I know I will never hold a stock under a declining 50-day moving average, under a declining 200-day moving average, because then at least my loss is limited. And whew, what was this? What was the high here? 360 down to like $18. Ruthless. But yeah, so for the past 3 months, we've been potentially putting in our stage 1 base because it fell 90%, over 90%. Maybe not over 90%, but around 90% from the highs. No, it is over 90%. I think I'm doing that math right. But eventually, like, things can fall 90%. They're not going to fall 100%, right? So eventually, shorting and the sellers get exhausted. You get an oversold bounce. And with these oversold bounces on heavily shorted names, I think this is still pretty heavily shorted. 10% short interest on this. It was higher than that before. But you'll get these short squeezes, which are very quick, very powerful, but also don't last very long. So we had one from $20 up to $32. So that's a 50% gain. But it barely shows on this graph because of where we came from. So that just shows you, like, you really don't want to hold a losing trade because it can work against you So much so that you'll like this is. I don't want to speak in absolutes. This is almost guaranteed not to come back to its highs. So if that's what you're waiting for in Carvana, it's probably not going to do that. We also had a rally from 19 all the way up to 50, so that's almost a 200% gain, and then we crash back down. And it's really hard to see in here, but we can go to like a 60-minute chart. Just recently, we had 20 up to 50, and then a really nice short as the market went from overbought to quickly kind of oversold, had a mini bounce, and then traded down again. I don't know if there was news yesterday, but this was up like 11% yesterday. Let's see, what was it up? 15%. But then today we gapped down and then closed down 13%, right by yesterday's close or the previous day's close. So this is like all over the place, and there's not a super clean entry point on the short side either, which is like, that's what's really frustrating about these news-driven like market drops is I could tell that the indexes, say we didn't have CPI numbers coming out, you could tell the indexes were getting a little ahead of themselves. They were up 7% in just 4 trading days. So with that, and we start to think, okay, we don't want to be putting on new long positions, so we're thinking short. So we go to the weaker like stocks in the market, the Carvanas, the Palantirs, the Zooms, anything Cathie Wood is holding. And then you look for low risk entry points in those names. But with a gap down, are we going to be chasing a gap down? Maybe. I mean, if you did it, you crushed it today. But if you do that 100 times, it's going to be harder and harder to manage your risk over that long period of time, or like the number of simulations. So it was just a really frustrating day to trade because we got a gap down. We didn't get an initial rally that you could have then shorted on weakness. And now we just sold off throughout the rest of the day. Do I really want to put on new short exposure after a day that we were down 5.5%? I'm not super confident in that either. And that's why I go back to, I'm not trying to make a lot of money right now. I'm trying to take notes, study the market, and get myself in a very good position, both mentally and preparation-wise, when we do get a bid in the market to trade some of the stronger names to the long side. If we get an oversold bounce and it's like very weak and we don't have news that's really driving everything, then we can short things again in 3 or 4 days along key moving averages, losing whole numbers, something like that, where we can still manage our risk pretty tightly. But the gap down and then just flush today was just super frustrating because I couldn't get anything going on the short end. But all right, let's take a look at Nerve. So yeah, this one, I see it has high daily volume. It's still so volatile to me. It is like, this is the nice pattern. So I see what you're looking at, Mike. We're starting to tighten up. Maybe on a 5-minute chart gets better. The problem with these is like, if one of these start working, chances are people are going to sell into that to pay for the losses of their other trades. So like, even if we get 1 stock or 3 stocks, 5 stocks to break out and to work well, one, that's just very low probability that we are going to be in those very few stocks that work. So like a little bit of an ego, and I'm talking to myself, thinking about like the potential trades I'd take. But also, you're going to see people use stocks that break out to sell into strength and pay for their losses. So this is setting up okay. I would like it a little bit tighter, a couple more days, have volume dry up, but it's one to keep on the watch list. Seal, another biotech. Yeah, stocks under $5, I do not trade. I trade the best based on the technical analysis that I've like studied using what institutions do, how they accumulate stocks, how they build into positions, and most institutions can't or don't buy stocks under $5. So the type of patterns aren't exactly the same trading stocks under $5, so I just don't do it. It definitely pays. One of the things that Mark Minervini talks about is it pays to specialize in trading. You don't want to be a jack of all trades because being average at a bunch of different strategies is a great way to lose just a little bit of money almost every day in the market. You want to master one strategy that fits your personality and master when to, probably the most important, when to step away from the market, when to understand that your strategy isn't fitting the market conditions right now and just not trade, but then also understand when it's time to press with your strategy, with that market condition, with the stocks that are setting up. And that's when you make a lot of money. So as traders, we don't get paid by the hour. Like all the hours that we spend staring at the screen, we don't get more money. We only get money when we're actually in the market trading, and we only want to be in the market when the market environment fits our trading strategy and there's quality setups, high probability setups with low risk entry points. And I'm not seeing that right now. So I'd rather be a little bit more patient. And ARDX. Yeah, same thing. I don't know. I also don't like to trade stocks that have these giant gap downs either. But I mean, up 8% today. I don't know. Not something I will be trading. Biotechs, they are working. We could keep watching them, but let's keep the price above $5. All right, let's see. STEM is holding up well. I'm in, but clearly early. Yeah, I've been watching this one as well. Computer software, 138 out of 197, provides energy storage solutions with AI-powered analytics to optimize energy use. So it's kind of like energy adjacent, which is good. Because energy, whether it be oil and gas, solar, alternative energy, those are the groups that we want to be focusing on right now. So if you're going to be a software company, be energy adjacent. I like it. A+ accumulation distribution rating, meaning many of the heavy volume days are coming on up days versus down days, which is exactly what you want to see if you're trading from the long side. 79 composite rating, just because earnings per share have been negative. After-tax profit margins, kind of a nightmare, but sales are improving, over 100% growth for the last 4 quarters year over year. So that's nice to see. Had a nice move from about $6 up to $16. You do have this overhead supply on the left side of the chart, which, I mean, if we're making the perfect setup to trade, the perfect setup doesn't have that. But there's not going to be as many perfect setups in this market. Just like to go to a 60-minute chart and just kind of look at the structure of how it's been trading intraday. Slightly higher low, higher low. What was this down today? Only 2%? 1%? Yeah, only 1% down. See, we have this pretty obvious pivot at $17, and a lot of people are going to be watching this. So if I were to trade this and it breaks through 17, I'm looking to immediately sell into that strength, because this is such an easy, you draw a line across the top, and if this stock is working and it's working well through a clean pivot, people know that that's going to bring liquidity to that area. And if they want out, if people want to continue to de-risk in the market, they're going to be using that liquidity to sell into. So with these setups, I mean, it's a strong stock recently in the right adjacent group. It could work, but I wouldn't be looking for a home run in the trade. I would be looking for 5% gain and then selling into that strength, something like that. Because also, if you look to the left of the chart, when I have this up at the pivot, that's right where the previous support was. So it came back, bounced, and then it eventually broke under that, rallied back up. If I come over here, it broke under here, rallied back up, and then got rejected right at that $17 area, 16.5, 17, whatever that is. So it's a pretty obvious pivot. We'll see if we come through that area with liquidity. And again, I'm hoping I'm wrong, because that means more stocks are going to be setting up if breakouts start working. But something we got to be a little bit careful of. But it is on my watch list. Just wasn't one of the 8 that I was going to cover today. But Danny, good job bringing that up. Michael took a position in H&R Block yesterday. Maybe a little bit rushed on that, Michael. Didn't break over yesterday's high. Maybe there was a intraday pivot. Probably. Yeah, so you probably got it in 45-40 area. We broke over there, immediately reversed, and now we're down a little bit. But yeah, H&R Block's holding up okay. Carvana, yeah. I mean, it depends. Like if you're a day trader, you can find a position intraday, like stop at $37, break under 36.50 is your entry, something like that. But I don't know. With another gap down, it's just going to be tough to manage your risk. And you could do it exactly how I said there, but I don't know, a 5% down day on the indexes, it just feels like there's very little liquidity in the market, and that creates volatile moves in both directions. And after a 5% down day, 5.5% down day on the NASDAQ, and this looks like the lows right at the 50-day moving average. We're right on the 21 EMA. We're right at the 8-day. The 50-day is 8% below. Yeah, I don't know. It's one of the stocks that I do short from time to time, and it's made me good money this year, but I don't really want to short the gap down. I would have rather short, like I shorted in here when we broke under 50. That was my entry, and then it was a really nice short play. But that wasn't a gap down. It was a nice intraday entry point. XBI, yeah, so biotech continues to just hit this 200-day moving average and stall out. Rallies, stalls out, rallies, stalls out. And the relative strength since then has been flat. So this is the relative strength compared to the S&P 500. It's just been like choppy but flat. We got to get over this 200-day moving average and start putting in higher highs and higher lows. But it is one of the groups, like biotech is what, sixth strongest? Yeah, sixth strongest group out of 197. So XBI is something to focus on. Doesn't really respect the 50-day, the 21, the 8-day. Like this ETF doesn't really respect many moving averages, but it does tend to stall out at that 200-day a little bit more. All right, ENVX. Electrical power equipment, 67th strongest out of 197. 66 composite rating, no earnings, no sales, no after-tax profit margins to talk about. 4 million shares traded, so it's liquid enough. Kind of all over there on the weekly chart. I have this in my world of stocks, but I haven't given it much time. Just because ideally you would have had this pullback on lighter than average volume after a move like this. Even if the market comes in, you would expect okay, I don't want a bunch of people selling that move. I want people to be like, yes, it moved up 80%, but that doesn't scare me. But it looks like it scared a lot of people because that was heavier than average volume leaving, and we rally up again, sell off again. Yeah, it's just kind of all over the place. It could work, but also if you're buying here, you got some overhead resistance up to the left. You obviously know there are sellers around $25. Yeah, we'll see if it flags out into 20 in the 21 EMA. But I don't know. Not the type of stock that I would trade. All right, one more minute. Any last questions? Otherwise, thank you guys so much for showing up to the live stream. I know today was a really tough day in the market. But again, if you guys are watching this, that means you survived the worst day since the COVID crash. We've all made it. Let's live to trade another day. Always keep prioritizing risk management. There's going to be a time where the market gets very easy. There's multiple potential leadership groups setting up with multiple breakout type setups. Liquidity is coming back in the market. Things will be good again, but we want to be patient, keep our capital near its highs, keep our mental capital and our confidence near our highs. So when eventually we do get that tradable rally or that favorable market environment, we'll be able to press the gas with confidence and with capital. Right now, It's just time to wait, time to be patient. Even the setups that we covered today, use them as mental checkpoints. Don't try to get too aggressive. Don't try to hit any home runs or triples. If anything, singles and doubles, and even that, like with what we just saw today, it's going to take some time for like high quality setups and the expectation for a breakout to work. Because if Amazon was down 7% today, Meta was down 9%, Nvidia was down 9%, people are going to be selling any stock that starts to work, starts to break out to pay for those losses. So just be patient, keep identifying those relative strength stocks day to day, and then when things start to firm up, we'll be ready. I don't see any more comments, so I'll leave it at that. Thank you guys for showing up. I'll see you guys. I got a trading audit video coming out on Thursday, and then I'll be doing my next audit either Wednesday night or Thursday night. So make sure you subscribe